Started, I just want to say I'm really looking forward to meeting everyone, as many of you as possible, in Bali in a couple of weeks, meeting face to face. It's going to be great. This is a pretty momentous occasion, at least in terms of technical indicators, for the US dollar. It started in the past week, Thursday, when the CPI, Consumer Price Index, came out with a reading that led traders and investors to believe that inflation might be pulling back, might be, retreating from its strong march forward. There's some quibbles with that, but let's look at the charts and see what drove that and what the outcome of that report was. I'm looking here at Forex Factory and the CPI year over year chart as reported on a monthly basis. And you'll see that the inflation numbers really got going here in 2021, and in 2022 the Fed decided to do something about it. It took a little while for any of their interest rate hikes to have an effect, but over the past 5 months the inflation rate has come down. Now, the quibble is that's still 7.7% annual. That's still crazy high compared to where we've been in the past. So why do people think that inflation is over and that the Fed won't continue to hike rates? Well, it gets down to the nuts and bolts of how much work the Fed has to do. I think if you look at this number here, you can see why people got excited. The forecast, this is the month over month change, right? The forecast was 0.6% increase in the consumer price index, the cost of goods that the typical person has to pay for in the United States. And that number was forecast to be 0.6. Well, multiply that by 12, you see, and you come up with a number like 7.2. 7.2 is lower than what the current annual rate is, but that would be a projection going forward. So 7.7 to 7.2 as a projection would mean, we're slowly declining. But what came through was 0.04 on the month over month. 0.04, multiply that by 12, and what you get is something just under 5%. So it isn't so much where we're sitting right now, it's where people think we're going to be 6 months to 12 months from now. We could see inflation as low as 5% or less in the United States. And I think that's kind of a tipping point. People feel like, under 5%? Inflation is over. We can live with under 5%. Well, even that is still pretty high for what people are used to in the United States. But historically, if you factor in all of the years of inflation, over any given 30-year period, it seems like the average is about 5.5%. Now, that means you get a lot of years that are low, and you get some years that are crazy high. Hard to tell if that's really a sustainable measure. But the fact that the trend is forecasting to go under 5%, that's what's got investors excited. And their response to this was to buy up the markets. So let me just jump here. Okay, this chart has the U.S. dollar index and the S&P 500 and also the Russell 2000 and oil. So we can see just kind of how everything was reacting to the news over the past couple of days. Small cap stocks and large cap stocks, particularly large cap stocks, really took off. Big old gap signals. Those of you who've heard me talk before about the importance of gap signals, this was a massive gap day all across the U.S. markets. But for currency traders, what does that mean? Well, it's right over there. Check out what the dollar has done. These probability cones are based on the statistical move of the past 500 days to give me an idea of how unusual the current move is. What you can see here is that recently the US dollar ran up to a point that was 2 standard deviations higher than normal, and since then has worked its way all the way down to almost 2 standard deviations below normal. That is a very significant move. And a lot of people are looking at that and saying, that's it. That's the flip. That's the change of trend. Dollar was going up. Dollar will now be going down. It might be a little early to say that, but that is, I would agree, very strong evidence You've got lower highs and lower lows on the dollar. And for currency traders, that's all dollar denominated pairs. They're going to be impacted by that. So you look here, we've got the euro, and of course the dollar is going down, euro's going up. Euro is breaking out, making a lot of new high. The US dollar in front of the Japanese yen, US dollar going down, meaning dollar yen is going to go down similarly. And look, it's way outside the probability cones. The pairs that don't have anything to do with the US dollar are going to look a lot tamer. Australian dollar, Japanese yen cross, look at that. We're just right at average. So what's really pushing the markets around out there, I mean, the things that are making the big moves are the news items on the US dollar and how people are going to treat the US dollar. The Australian dollar, like the euro, strongly up compared to the US dollar. And this looks like it could be a very sustainable trend. So for the year 2022, I should say, we have had great currency moves if you're going long the dollar and shorting everything else against it. It is time to consider looking for trades on the other side starting this coming week. And as far as stocks are concerned, one more thing before I get there, I'll say that, I have this chart up here that I got to show you too. I mentioned a few months ago, bonds and the euro are pretty well correlated. And this is bond futures. And here we come down, and now they're coming up. But notice that the euro is leading. In other words, it bottomed out and started trending higher well before U.S. bonds did. So it could be that the euro is giving us early signals for when to trade in and out of bonds. The stocks, the U.S. stock market, along with the bond market, is looking very attractive right now. Among all stocks there, probably NVIDIA, among the tech stocks, looks the best. I mean, it's just been charging up. Micron looks strong. Netflix looks really great. They had good news, jumped up. The gap has held support, and the old earnings gap held support, and now we've got a resurgence of the move. And then check out Microsoft. This is textbook. Red day down, green day up. You buy the next day, and you're off to a good start already. Apple, similar performance. So for those of you that are going to be in Bali, we'll be talking a lot more about that gap signal and the best ways to use it. Until then, everyone, take care and trade well.